Hello, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures, here to talk to you about the grain markets this morning. Corn market, I want to mention the U.S. ethanol industry. Last year, 2014, we exported 860 million gallons of ethanol. This was 6% of total production. But 8 years ago, this industry did not exist. So here in 2015, ethanol exports, it's not going to carry us out of the doldrums here for our core demand, but here's an industry that didn't exist 8 years ago. So we'll continue to talk about it. The biggest customers were Canada, Brazil, United Arab Emirates, and the Philippines. South Africa, a big maize producer, a big corn producer in that part of the world. They've had a significant drought there. They're going to import corn this year for the first time since 1990. So here's some things that are different and changing as we speak. The soybean market, certainly acres here this spring is going to be really important. Weather and price are going to be the driving factors. Are we going to get all these acres into soybeans at the expense of corn? So it's kind of setting up, you get all these acres into soybeans, that's bearish soybeans, and then no acres into corn or less acres into corn, and that becomes bullish corn. So usually these two trade together in sympathy. So it'll be interesting to see how this battle plays itself out as we move into the spring. China in the soybean market. China eats 52% of all of the hogs in the world today. So let's put this in perspective. Every week we kill about 2 million hogs, 2.2, 2.3, and China eats 52% of this. So never in the history of the world have we had a middle class consuming like this. Hence the demand for corn, the demand for soybean meal. It's just phenomenal. Okay, the trucker strike in Brazil. It's on, it's off, it's on, it's off. I don't think that's the reason why we're rallying this. Everybody's short soybeans, all this big production. It's all factored into the market. Soybean meal got above the 200-day moving average this week. I am very impressed with that. So in my estimate, the technicals are different than the fundamentals. The technicals are friendly, the fundamentals are bearish. So we'll see what plays out on this. Moving ahead next week, what's going to drive the markets? Keep an eye on the dollar. Strong dollar crimps our exports. Exports this week were so-so. They were hum-hum, but you can't hit them out of the park on exports every single week. And keep an eye on crude oil. It sets the tone for all of the commodity markets. And next week we'll be into the month of March, get closer to that March 31st planning intentions, where we get the first read on how many acres of soybeans, how many acres of corn, and that'll be very, very big, very big report here at the end of March. So have a good weekend, and we'll talk to you next week. Futures and options on futures may involve substantial risk and may not be suitable for all investors.